Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, November 30th. It's 6:50 in the morning as I'm starting the video. Got a lot of red on the board this morning. Bitcoin down 1.7%, oil down 2.4%, copper down 0.5%, nat gas down 4%, large caps down 1%, NASDAQ 0.5%, and small caps taking the most of the heat, down 1.7%. Gold's up 0.6. Running over to the macro, we got the Case-Shiller Index, Home Pricing Index, Chicago Fed, Consumer Sentiment, and there's a speech scheduled for 10 a.m. this morning. Well, I guess it's testimony in front of Congress with Janet Yellen and Jay Powell, and probably because of this new variant, they're probably going to get asked, what does this mean for Fed policy and all that kind of stuff. So there may be some interesting comments that Powell makes in that regard. That whenever the Fed chair is speaking, you gotta be ready for anything. If he, whatever he may say will carry a lot of weight. And you've also got Yellen in there, Secretary of Treasury. So I'm sure CNBC and all these people will be all over it. But that's at 10 a.m. A lot of bigger names after the bell today on earnings: CrowdStrike, Salesforce, Zscaler, Okta, Splunk, and there's a few more. You'll see them on the calendar in the on the blog site, and you can grab some detail on that. So what I want to do is, again, set the table for us, since yesterday looked like a head fake, right? They bounce it, and now they pull the rug overnight. And what I heard was the Moderna CEO was out talking a little trash. When I say that, well, let me say it a different way. He had negative comments to say about the efficacy of the vaccines against these variant strains. And he said, well, I can't see how they would be more effective. They're, realistically, they're going to be less effective. So I don't think he was, I don't think it was malicious. It just wasn't positive, and the market apparently didn't like that. Now, I haven't read the transcript or listened to any of the interviews that he may have done, but that's one of the big things that has been attributed to this sell-off overnight. So, and another thing I want to say is we just have to be prepared over the next 2 weeks at least for a market that is very sensitive to headline risk. Just like last night, headline risk. Comments were made. They pulled the rug. You wake up in the morning thinking you were set up perfect in a bounce, and they take it away. So that's the environment. Now, whether you want to participate in that environment is a totally different thing. But I think whoever is in the market needs to realize there's going to be added volatility until somebody comes out and says, yeah, we got it all figured out. We got the data in. The existing vaccines take care of this new variant fine. It's really no different than the Delta variant. And as a matter of fact, the symptoms seem to be not as bad. So when you get that signal, then you'll get the, more of a sustained move, I would imagine. So here we are on the VIX. Let's take a look. Friday, we reach up to 29. Yesterday, we're down 23. Now this morning, we're at 27. right in the middle of this upper band. And if you've been paying attention, you'll notice that I changed this chart a little bit. And what I did was put more or less a resistance band between 29 and 30. Here, price was contained at 29. Here, 29. Back here, 30. So if we go back a year, with everything that's happened, 30 has contained everything. Okay? So, and most recently, 29. So with this sell-off this morning, we're at 27. If there's a flush move, like right out of the gate, whoosh, down, and you see the VIX, go 29, 30, 31, to make a long story short, I don't think it's going to be able to sustain it. I think what you're going to see is, something like this, where you'll get that penetrating move that from the whoosh, that everybody goes out there and tries to buy protection and all that kind of stuff, driving that VIX into this band. I don't think it's going to be able to hold it. I think there's going to be a quick retreat. That could happen, say, starting at 10:30, after an hour of brisk selling, and then they take it the other way. I'll have a few more comments on the VIX in a moment, but now I want to go to the oscillators. Here's NYMO and NYSE. We were at minus 70 yesterday, or heading into the day. Yesterday we were at minus 70. Now we're minus 55, and as soon as the bell rings, we're going to be back at minus 70 again. So oversold. Here it is for the NASDAQ. We were at 61. I mean, it didn't even hardly do anything. We're still at 59. So technically down towards this oversold reading, and you can see reaction. I mean, going all the way back. That's been a pretty good location to look for a reversal. So what I want to implore upon you, if you're new to my work or just need a refresher, this is not the place. This is not the time or place to go out there and load up on puts for Armageddon. Puts right now are going to be very expensive. We know that the oscillators are stretched to the downside, and if we get a big rug pull this morning, I mean, it could go down to minus 90. The problem with this indicator is it's end of day. So you can't just, where's NYMO right now? Can't do it. You got to wait till the end. And that makes it a little tricky on, knowing exactly where this thing is going to reverse, because you see here 78, 70. This is this is in March, 93, 63, 65, bunch of 74s back here. So just know that the starting point for today is oversold. And they can make it go more oversold selling that first hour. But what I want you to look for is a place on the chart where technical support intersects with the VIX. What do I mean by that? Let's take SPY for example. Here was our Friday lows at 458, gap up, run into resistance here at 466, and now today there's going to be a gap down, and the last time I looked, price was trading around 460, so inside of this gap. And so if there is a gap and go to the downside, meaning a gap down, it opens at 460, and then there's a lot of immediate selling, and they drive it down, they break 459, they fill this gap, they come down to 458, which was the prior low, and then they're in this little band between 456 and 457.50. You've got a sizable volume over price bar here, leaving some, giving some technical support there. And you've got the rising 50-day on the daily chart. And what I can envision seeing is them making this big move. A lot of technicians would probably, go, oh my God, it broke this level, here we go. And so what I want to be thinking about is an objective long entry here at 456. Oh, wait, is that? Yeah, 456 at this 50-day line. If the 50 doesn't hold, all bets are off. We're going to go lower. But I think that's a good place to look for a reversal after a strong first hour of selling, if that's what we get. And so if you took your short up here yesterday, I would be looking to cover that down in the 458 to 456 area. And then seeing if price stabilizes. And, if you got the VIX up at 29 or 30, when all this happens and price stops going down, I think that's when, number one, I don't think the VIX can hold 30 or higher for very long, maybe a few hours, but I can't see that holding overnight with the oscillators stretched as far as they are. And I just don't see that. I think you're going to get a move on the open, come down, retest this low, and potentially make a run for the 50 down here. But that's where I think it stops, at least for today. Now we're going to have to reassess what we want to do for tomorrow. But as far as today goes, I would be looking for, key support, elevated VIX, and a high probability entry for a long. SPY 30-minute just gives you that extra granularity. Here was the gap up, got halfway up the prior gap. Now we're going to come down, probably test 458, and if it breaks it, look for that 456 area to hold on SPY. Moving on to the Qs. Pre-market I got the Qs at 398, which is right here, down hardly at all. Same kind of idea applies, but it doesn't look at this point that a lot of heat is going to be put on the Qs. Now that could change immediately, but I mean, it's the one that's the strongest in the pre-market. So if we get a move down to the gap at 395, I would imagine that gap would hold. And don't forget, we've got a line, an important line of support right here at 394. So if this came down and you got into the 394s and it looks like the bears are losing gas, that would be a place to look for a reversal with a stop in the 393s area, because you've got gap support and you've got technical support between 395 and 394. So that's the place where I would look for a reversal if it holds. If it looks like the bears are running out of gas, that would be my first guess. If not, if 394 fails, I would be looking for a gap fill and a back test of 390. Support, a lot of support in here and support in here. And so then, for my money, if price breaks the prior low here at 390, you're going to get a fast move down to the 50 at 384. Now, if you're nimble and on top of it and are comfortable, if you see a breakdown below 390, I think you can do a tactical short there to try and capture a $6 move on a panic sell-off. But I would certainly cover that into 384 if you got the whole move, simply because of this 50. And we've seen it time and time and time again where that 50 is held. So I think that's going to be a really, really important place on the chart. Here's the 30-minute chart. Just got extra granularity coming down. See if this gap area can hold. These were the support areas that we just talked about on the 2-hour time frame. So really the one that's been the most disappointing and the one that worries me the most is IWM. Big breakout. Turned out to be a failed breakout, or a bull trap, if you will. Everybody piled in, like me. It's been a year. We just broke out. Back test is fine. But when it failed, that was a big warning shot. And so now we are trading down around 218 in the pre-market. And that is right back to the 200 at, where is that? Yeah, 218 is the 200. Now, if that doesn't produce a bounce and it slices right through it, you can just go ahead and pencil in 210, because that's where it's going. We said yesterday and a million times before, when you leave the trading zone and then you come back in, very bearish. And so I guess the idea is that if some new variant is going to race across the country and we're going back into lockdown and everybody stays at home, then all the businesses and industries contained in IWM are going to get hurt the most because, for the most part, they're domestically oriented. They're not as well capitalized as the large caps. So, they're going to be hurt the most on a lockdown scenario. But anyways, I think 218 is going to be a nice pivot area. If it holds it this morning, I think you can, and you see SPY start to stabilize and the Qs start to stabilize, and say price here undercut the 200 like the 217, reverses, and then recaptures 218. Remember, recapturing an important layer from below is bullish. You can get long on a break above 218 and look for 222 for starters. And if you get the breakout there, then back up to 226. Now, one thing I want to mention, and I haven't done so already, on the open, it's going to be a little tricky because now we've got gaps above and below, right? We have, let me just go back to this. So here's the gap below. And when price gaps down in the morning and say it opens up at 398, you're going to have a gap from 394, or excuse me, from 399 to wherever it opens. So you're going to have a point in time here where they could drive it lower to fill this gap first, or drive it higher, close the upper gap, and then roll over and go after the gap below. So, I mean, it's going to break one way or another out of the gate. Just remember, you've got gaps on either side, right? So just be aware of that. Have them marked on your chart. You may want to do that, at 9:15, etc. So you'll know visually what way it's going to go and see if you want to take that trade. So for instance, if it broke down below 395, you've got a gap that goes to 391, $4, probably even go down here to 390. So, I mean, that's a trade. And then you've probably got close to $4 on the upside. So either way it goes, you may have a really nice trade setup to follow. All right. I looked at the FATMAAN names prior to, starting the video here. They seem to be holding up really well. I mean, we saw that the Qs were down 0.5%, which is nothing compared to the small caps and even the large caps. So I think these pivots are going to be accurate, if I can use that word. So here we got price. We had a low test down here at 331. Really, and those were just reaches below that failed. You've got a support line at 334, maybe 333, spot 75 for this gap fill. I'd be looking for a reversal there if you see price stabilize and not be able to make any progress. But if that breaks, you're going to come quickly down to 330 and test the top of this gap. So, but all in all, if they ramp it and break 341, 340.50, right in that area. Actually it's 340 spot 50. If it can break that layer, then it can run up here to 345, 346. But I only envision that if the whole market has stabilized. I would be a little skeptical if that was the only thing running. You're going to see FATMAAN work together today, either to the downside or the upside. I don't think you get one-offs of a Facebook rocketing higher and everything else falling apart. Let's go on to Apple. Did not fill the upper gap yesterday, and now we got a gap below, and we're probably going to open right in here in that 159 area. So gap below, gap above, which way does it go first? I think the ultra key level for you Apple traders out there, even if you're in swing positions, out in time, you got to have 157 hold. If it can't, then I think this thing becomes vulnerable very quickly down to 155, and then probably all the way back. I mean, if the market really falls apart. But my base case expectations, if there is a whoosh, you get another bite at the apple at 157. Like if you wanted to be in it at some point and you keep getting locked out or hesitate, I think you get a move back into 157 that holds, then you pull the trigger with a stop just below and look for a bounce. Tesla, in a nice little flag. I looked pre-market. Price is still in that flag between 1120 and 1140. If you see 1120 break, probably going to come back down here to 1100 very quickly. And I wouldn't doubt it if it came back to 1080, where we've got all these touches. Support layer should be pretty good right there. So if it comes back and fills that gap to 1080, I think that's your super objective trade location. And ultimately, what we want to see is a move to take out 1150, because then that would open the door back to 1200. Moving on to Microsoft. If I can get it. Yeah, here we go. So this was Friday. Big gap up that's marked. Came right up to resistance at 338 and then started to roll over. So this morning, depending on where it opens, you're going to have this big gap to fill, and then you'll have a gap above as well. I would certainly have an alarm at 338. Why? Because once you get back up above 338, I think that trading is going to get a lot easier, and I think you're going to get a quick move up to 340 and a half, and then on up to 342. So even if you miss everything in here, I'd certainly be a buyer at 338. And, that's no different than, it's recapturing a layer layer of resistance from below, and that's bullish, plus you've got a lot of resistance built up here, and then you break above, that's bullish. So, all right, let's see what we can see on the daily chart real quick. Yeah, you got the 50 coming in at 320, and then you've got another gap below down here at 315, and 305 was the original breakout level. Amazon looks a lot like Microsoft in a sense, because we got a well-defined resistance level right here at 3,600. It's made a couple runs at it and failed. It failed yesterday, and so now you got a key off of 35.40, where you've got a $30 gap, and that's this going back to retest this low. Notice too, you've got a good line of support right here at 35.40. So may get a move down that holds, and if you get a sense that the market is reversing and Amazon really hasn't gone down that much, that shows a lot of relative strength, and I think that would be an objective location to try a long with a stop just below if the top of that gap proves to be solid support. And at least the way I'm looking at it now, it's going to be a pretty strong layer, because you've got all these touches where it held up before. So assume that support holds until it doesn't. And if you get stopped out, I mean, that's trading. Then you'll get a gap fill and a move down to 3,500. And then that would be a place where if it can't hold 3,500, I mean, we got a lot of fish to fry. If all the FATMAAN names, Apple loses 157, Facebook loses 334, Tesla rolls over, Microsoft. When you start seeing the group fall apart, we're in for more pain. And while I'm on the topic, you may want to jot this down. Go into your FATMAAN names and mark yesterday's low. Mark yesterday's low, the Friday low. I'm sorry. Mark the Friday low, because we had a gap up yesterday. Mark the Friday low, and across the board on all the FATMAAN names, mark the low, and then if you start seeing those go off, then the selling is persisting, that we've already lost the Friday low. And whenever you break a prior low, if you're long, you got to get out and reorient yourself to bearish mode, because once you break a prior low, usually that's going to bring in a lot more sellers. Google, same thing really. Gap up, found resistance here at 29.30. You've got a line of support at 28.95, and then you've got your gap at 28.80, and here is your Friday low right here at 28.40. So if you were going to be a Google guy, and it opens up here and then runs down and fills this gap, that's your objective long. You can try longs up here, but this would be like at the last chance at the train station. Is it going to reverse there? Excuse me. Or break down and go lower. Netflix, I drew in a little flag here. It actually, was only down $1 or so yesterday. I think 660, or 660 is going to be a key on any move down. And I think if you break 660, that brings 649 or 646 into play to test the prior low. Semis, big move yesterday. What was that? Yeah, up 12. Got up into this 310 area, and now we're going to go down. Didn't look at it pre-market. The key level is this 299 level right here. You've got the bottom of the gap, you've got the uptrend line, and you've got lateral support. If you lose 299, you're probably going to come down here at a minimum and fill this gap at 292.50, and then just remember you've got a massive void below on that. So if you have been trying to go long, and at some point, whether it's today or this week or whatever, a break below 292.50, you got to get short there, because I think you got at least $12 of downside there. Quick look at ARC. Genomics continues to work. It's going to be down today. I think we're going down to 55 there just for starters. ARC Innovation, KK. We had the move down last week, and we had a little green bar yesterday, which they then reversed. 107.50 is your pivot here, and if it loses that, I think it's going to 100. And if all hell breaks loose under 100, they're going to be piling in like crazy. So have those levels if you're at all interested in a trade on ARC. And see, very much the same kind of look that we just looked at, except now we're already below on the ARC FinTech. 48 is your pivot. Anything below that targets 45. And then if we break that low, 45 going much, much lower. So anyhow, a lot of information. Going to be a tricky open with gaps above and below. Elevated VIX. We got resistance at 29 to 30. Be psychologically ready for a whoosh bar lower that finds key support, that has VIX up near 29 or 30. Find that place on the chart where price stops going down. That's going to be an objective entry. And one last reminder, don't fight NIMO. You're going to lose. Don't be loading up, duration puts when the oscillators are at minus 70. It's going to reverse. It may not be at 10:30, but when you get down in the minus 70s, 80s, 90s, it's borrowed time. Just look back at the chart. That's when most sheep get slaughtered. They're late to the party. They pay, the IV is going to be jacked on these puts. So it's going to be expensive. And just about the time you load up, they rip it the other way. So if you want to do tactical shorts during the day, that's fine. That's active trading. What I'm talking about is people on the daily time frame. that, they may, they're taking some heat on their longs and now they want to protect it. Too late. Can't do it because of the reasons that I just said. Sit tight at this point. You're going to get a reversal, and then we'll have to determine, is it a durable bottom or is it just a temporary bounce? That'll be the art of it. Is this one for real, or are we just going to get another headline that takes us down? So let's wrap it up there. Any new visitors to the site, thank you so much. I appreciate the time. I hope these levels and thoughts will help you get a crystalline trade plan for today and make it a little easier having the levels all laid out for you. I think that's the benefit of being here and having me kind of lay that out for you. So anyways, thank you. Hit the subscribe button and the alarm bell. And if you like, go over in the show notes. You'll find a link to register for all my content, and you'll get all that in your email box. So have a good day of trading. Be careful out there. If you get flustered, step away from the desk for 5 minutes, gather your thoughts, and then dive back in. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.